Hello, everybody. Welcome back to the channel. We have a video for you now that is related to something that has really been getting a lot of attention for those who are familiar with fundraising and raising funds and venture capital and startups. So this is a very meaty article. I wanted to read it for you all and then provide some comments because some of us on the team have many, many years, decades really of experience. So let's just go through this and let's see. So here we go. The funding. Why crypto VCs are expanding beyond crypto. Okay. So the quick takes up top. It says this is the main section from the 54th edition of the funding sent out to our subscribers on June 28th. The funding is a fortnightly newsletter written by Yogita Khatri, the blog's longest serving editorial member. All right, so here we go. For years, crypto venture capital firms invested almost exclusively in crypto and blockchain startups. Now, some of the industry's biggest firms are starting to look beyond the sector. All right. So earlier this week, Framework Ventures raised a 400 million fourth fund to invest in what it called frontier technologies. That include crypto, AI, robotics, energy, fintech, and more. Okay, so Paradigm is reportedly raising as much as 1.5 billion for a broader frontier tech fund focused on crypto, AI, and robotics. Haun Ventures raised a 1 billion second fund to invest primarily in crypto and blockchain companies, but also in firms in financial services, the AI agentic economy, and alternative assets. YZi Labs, formerly Binance Labs, has also expanded beyond Web3 into AI and biotechnology. Not every major crypto VC is broadening its mandate. However, A16Z Crypto and Dragonfly, which have also raised new funds this year, remain focused on crypto. To better understand what's driving the shift, I asked crypto investors why some of the industry's biggest VCs are broadening their investment focus, why others remain crypto focused, and what the future of crypto venture capital looks like. Investors pointed to several reasons behind the shift, including a maturing crypto market, the rapid rise of AI and other technologies, larger funds seeking new opportunities, and the growing overlap between blockchain and adjacent industries. So here we go. Quote, our core mandate has not changed, but the biggest driver of the expanded opportunity set is our founder network, Framework Ventures general partner Rajiv Patel O'Connor said. Many people we have backed or worked with in past cycles are moving into adjacent verticals. Patel O'Connor also said the lines between frontier industries are dissolving fast and expects a wave of companies building at the intersection of blockchain, AI, robotics, and energy, making the firm's broader investment strategy a natural extension of our founding strategy, not a departure from it. Okay, now, others said the shift also reflects changes within the crypto venture market itself. Coin Fund founder, managing partner, and CEO Jake Bruckman said the industry is going through a maturation period, with fewer crypto verticals proving successful and a smaller pool of high quality deals. L1D co founder and managing partner Ray Hindissimile said crypto has become more mature, more serious, and more difficult to compete in, while adding that broader investment mandates are increasingly influenced by capital raising considerations. Fund size is also playing a role, according to some investors. Strobe Ventures managing partner Thomas Klokanaside, Thomas Klokana said, many funds that were raising during the 2021-2022 cycle are simply too large to deploy into crypto alone. When you are managing a couple of billion dollars, the current crypto deal count that meets the bar cannot absorb it, he said, adding that crypto, AI, and fintech are increasingly converging in at the infrastructure layer. Hypersphere Ventures founder Jack Platt said each technology cycle has been defined by its own frontier opportunities. While crypto dominated the 2017 to 2021 cycle, he said AI and a range of other technologies have emerged as compelling investment themes, changing where venture capital is flowing. There are just so many other interesting places to allocate capital, he said. When asked whether limited partners or LPs are encouraging crypto VCs to expand beyond crypto, investors generally said the shift is being driven by fund managers rather than their allocators. They noted, however, that views differ depending on the type of LP. Hindi said high net worth individuals and family offices are generally more receptive to broader investment mandates, while pension funds continue to back dedicated crypto strategies. HNWIs and family offices are often more interested in hot trends and are easier to onboard with that shift in mind, he said. Pension funds are different, very long term oriented and willing as we speak to commit to crypto only strategies. For LPs, the bigger concern is making sure managers remain transparent if their investment strategy changes, according to Andy Martinez, founder and CEO of Crypto Insights Group, which works with both allocators and fund managers. In our conversations with institutional allocators, the transparency is becoming just as important as performance itself. Can crypto VCs compete with generalist firms? Asked whether crypto VCs can realistically compete with established generalist venture firms outside crypto, most investors were skeptical. Hindi called the chances very unlikely, adding that while there may be exceptions, he would be unwilling to invest in such a strategy. L1D is also a fund of funds. Investors who have expanded beyond crypto, however, said they do not need to compete in exactly the same way as traditional venture firms. Framework's Patel O'Connor said the firm's advantage comes from moving quickly, leading rounds, and taking a hands-on approach with portfolio companies. That speed and certainty is something founders value, especially in competitive rounds, he said. Hypersphere's Platts argued that crypto VCs do not need to become experts across every new technology to compete. Instead, he said, investing is about making the right decisions, while the firm's existing founder network and flexibility to pursue opportunities that may be too small or outside the focus of the largest venture firms give it an edge. Okay. So why some VCs are staying crypto focused? While some major firms are broadening their mandates, others said they have no plans to move beyond crypto. L1D's Hindi said the firm's strategy remains unchanged because its pension funds LPs continue to value dedicated crypto managers. He also warned that while a handful of firms may successfully expand beyond crypto, very few will be able to adapt, most will fail. Hindi added that crypto venture capital is entering a very favorable investment vintage as competition across the sector eases. Strobes Klokanas said the firm has no intention of rebranding around AI despite increasing overlap between the two sectors. Instead, he said Strobe continues to focus on digital assets while investing where AI and crypto generally intersect, including agentic payments, AI-driven trading signals, and on-chain compute. We are only now getting to the part where you can build lasting businesses on this technology instead of just tokens, he said. Where investors see the biggest opportunities. Investors expanding beyond crypto said they continue to see significant opportunities within digital assets and across adjacent technology sectors. Outside crypto, Patel O'Connor said robotics stands out because of its long-term adoption potential and massive addressable market. I think it can result in truly venture-scale outcomes, and I think from an intelligence perspective, we're roughly at GP2 territory, he said. Within crypto, he remains bullish on stablecoins as they become increasingly embedded into fintech, while identifying on-chain capital formation and Hyperliquid's house of all finance thesis as some of the sector's most compelling long-term opportunities. Klokanas pointed to stablecoin infrastructure, cross-border payments, on-chain credit, prime brokerage, and structured lending as areas with significant room for growth. Bruckman highlighted decentralized AI, payments, stablecoins, tokenization, prediction markets, and on-chain finance as some of the firm's highest conviction themes, driven by growing institutional adoption and improving regulation. Platts said crypto has already found product market fit across stablecoins, payments, exchanges, and lending, while identifying AI infrastructure, semiconductors, data centers, biotechnology, aerospace, defense technology, robotics, nuclear, and quantum computing among the firm's highest conviction opportunities outside crypto. He said expanding beyond crypto has also required building new sourcing channels, including paying for access to certain private company opportunities while expanding the firm's network. He pointed to investments in SpaceX, Neuralink, and Erebor as examples of how Hypersphere has sourced deals beyond crypto. The future of crypto VC. Investors were divided on how quickly crypto venture firms will broaden their mandates, but most agree the category itself is likely to evolve. Klokanis expects the market to split between large multi-strategy firms with crypto practices and a smaller group of specialist investors that remain focused on digital assets. Platts, meanwhile, expects most crypto VCs to eventually broaden their mandates, arguing that crypto is ultimately a subsector of technology rather than a standalone category. He compared today's crypto funds with the telecom-focused funds of previous decades, saying the crypto VC label could eventually become outdated, even if dedicated crypto hedge funds continue to exist, because on-chain capital markets still require specialized expertise and carry high barriers to entry. Patel O'Connor drew a similar comparison to the internet-focused venture firms of the dot-com era, also saying that crypto VC label could eventually disappear. So that's the end of the article, and for people such as some of us on our team, this is really very well written, and we could have so little to disagree with the author, Yogita Khatri. And so if we very briefly go through this again, a lot of these are name brand VCs. So we got Framework, okay, on fund number 4. Fourth, we got Paradigm VC, 1.5 billion. Haun is at another billion, second fund. Okay, YZi, everybody knows YZi. And then, of course, A16Z and Dragonfly are the ones that will remain purely focused on crypto. Okay, so then they go on further to interview some of these fund managers or general partners. So for Framework, it's Rajiv Patel, and the majority of the quotes in this article are coming from him. But it's really very, very spot on. Okay, so we've got Coin Fund down here, Jake Bruckham, and I agree with this statement, at least, that, yes, the industry is going through a maturation period with fewer crypto verticals proving successful and a smaller pool of high quality deals. Okay, so that was what people below were also saying. So they have to go beyond the mandate to find really good deals, or pay for deal flow, or get quality deal flow. Okay, so right, while adding that broader investment mandates are increasingly influenced by capital raising considerations. So that is really the whole investment thesis right there. Broader investment mandates are increasingly influenced by capital raising considerations. So this is sort of supply and demand, right? What is the capital raising mandate, and therefore what is the investment mandate? What are the capital raising considerations of who is pitching the fund, or who is pitching the sort of end use vehicle or startup? And then what would be the investment mandates if you go further upstream to the people that are signing the checks and deploying that capital? So Hypersphere Ventures founder Jack Pled said each tech cycle has defined its own frontier opportunity. So yes, I agree with this comment as well about the 2017 to 2021 cycle. And then, of course, when they're saying that if you have LPs on certain funds, the shift is driven by fund managers rather than their allocators. So it's really whoever's in the driver's seat of these funds are the ones that are steering and directing the overall mandate, or the overall vision for that VC, or at least for that specific fund for that vintage, right? If they're raising fund 1, fund 2, fund 3, etc. And then, of course, this is a very good quote right here. So high net worth individuals and family officers are generally more receptive to broader investment mandates, meaning they're more flexible. They're not as confined or restricted to a certain mandate, right? Whereas while pension funds continue to back dedicated crypto strategies. So, quote, high net worth individuals and family offices are often more interested in hot trends and are easier to onboard with that shift in mind. Pension funds are different, very long term oriented and willing as we speak to commit to crypto only strategies, right? So they're bigger entities, they sign bigger checks, they have bigger minimums, so they really don't sign checks maybe below 10 million or something like that. So they have to have a really clear mandate. So if they are going to commit to crypto only, then it's going to continue to be crypto only, okay? So for LPs, the bigger concern is making sure managers remain transparent in their investment strategy changes, right? So exactly, if you are a limited partner and you have signed up to be a minority participant in a fund or a VC, the bigger concern is making sure that whoever is managing your fund remain transparent in their investment strategy changes. Okay, so good point there by Andy Martinez. And then, of course, this part of the article is saying crypto VCs versus generalists. And so unlikely, right, because generalist firms maybe just have a first mover advantage, among other things. Yes, so speed and certainty is something founders value, especially in competitive rounds. Whereas Hypersphere's Platt argue that crypto VCs do not need to become experts across every new technology to compete. Instead, investing is about making the right decisions while the firm's existing founder network and flexibility to pursue opportunities that may be too small or outside the focus of the largest venture firms give it an edge. So that means that if it's slightly outside of the crypto VC mandate or vision, if you have the founder network, if you have that immediate network of participants, they themselves will be nudging and pursuing these opportunities that are sort of on the outer edge. And this will give these VCs that competitive edge. Okay. And then, of course, it answers the question here why some VCs are staying crypto focused. And they're talking about sort of the shifting goalpost that crypto itself is now a shifting term. So that's how the article sort of wraps up at the end, is that what is the future of crypto? So it is certainly a maturing market. So overall, this is just a really exciting article for people that are interested in fundraising, that are interested in venture capital funds. This is a super well written article because it has numerous interviews, numerous quotes, and it really checks all the boxes about the sentiment right here, right now on what purely crypto dedicated VCs, or even let's say VCs that have been around for 5, 6, 7 years that are now really having an existential crisis of if they're going to become more focused on AI, or do they have to, deploy this capital and there's just not enough opportunity within crypto? So we've pretty much covered everything for that. Now, once again, as we like to do at the end of every video, gentle reminder here that we are cryptodeposit.org. So of course you can connect your wallet with our partner website Crypti, or of course MetaMask, which is, as you see here, what I use. There's dozens and dozens of wallets you can simply connect and scan and get started right away, all the way down here alphabetically, as you see here. And then, of course, you can deposit cash, you can get Australian, USD, etc. You can buy stables, USDC, USDT. You can deposit stables and earn a yield. Okay, it says deposit crypto and earn a yield. We've got a yield curve here, all right. And then furthermore, we've got our holdings. You'll see your bills in the form of NFTs. You've got your borrowing and lending protocol. As soon as you connect your wallet, that'll be visible. OTC, okay, if you want to negotiate larger ticket deals, we have OTC here. And then, of course, finally, on these tabs in the top, you can go over to statements. This will have your statements. If you connect your wallet, you'll have XMTP messaging, which is the highest security protocol out there. Activity, again, once you have your wallet connected, you can see that. And the last two tabs are exchange and swap. So there's a lot to cover here. Of course, white papers in the bottom section. We have a video on that in the YouTube channel. Any questions, you can email us at info@cryptodeposit.org. And so with that being said, we are wishing everybody a good day, a good evening, good afternoon. Very, very exciting article for those of us who are following this sort of thing. So hopefully you guys enjoyed going through this article as much as I, and great accolades to the author for publishing this bit of journalism. Much appreciated. Okay, see you on the next video in just a short little